Hello, everyone, and welcome back. Today, let's talk about one of the most talked about stocks in recent trading sessions, Bigbear.AI, which trades on the New York Stock Exchange under the ticker BBAI. If you've been following the market lately, you probably noticed how this relatively small artificial intelligence company suddenly became one of the biggest gainers of the week. So, what exactly happened? Well, Bigbear.AI's stock price jumped a massive 35.4% just this week alone. To put that in perspective, during the same period, the S&P 500, which represents a broad snapshot of the overall market, only gained about 1.2%, while the Nasdaq Composite, which is heavily weighted toward technology stocks, rose around 2.2%. Clearly, Bigbear.AI is not just moving in line with the market, it's far outperforming it. The main trigger behind this surge came from outside the company itself. The Federal Reserve, which sets U.S. interest rates, announced a 25 basis point rate cut. But that's not all. The Fed also signaled that there could be two more rate cuts before the end of the year. For many speculative and growth-oriented companies like Bigbear.AI, lower interest rates are like fuel on the fire. Cheaper borrowing costs and more liquidity in the system make it easier for these businesses to raise capital, expand operations, and attract investors who are willing to take on more risk in search of higher returns. And investors definitely noticed. That's why we saw such a strong rally not just in Bigbear.AI but across many companies that fall into the speculative growth category. After this week's rally, Bigbear.AI's stock is now up 54% for the year 2025 so far. That's a remarkable performance, especially given where the company started at the beginning of the year. But here's where things get interesting. Despite this impressive run-up in share price, the company's actual business performance hasn't been nearly as strong. Bigbear.AI has built its reputation around developing artificial intelligence solutions, particularly with applications in the defense industry. The defense sector is one of the hottest areas for AI right now because governments and militaries around the world are investing heavily in technology that can improve decision-making, logistics, and even battlefield strategy. The promise of landing big contracts in this space has generated a lot of investor excitement. However, when we look at the company's most recent financial results, the picture isn't nearly as rosy. In its second quarter earnings report released in August, Bigbear.AI posted a loss of 0.71 per share. That's a huge miss compared to Wall Street expectations, which were looking for something much smaller. In fact, the loss came in 0.65 worse than the average analyst estimate. Revenue wasn't great either. The company reported about $32.5 million in sales, which was nearly $8.1 million below what analysts had forecasted. To make matters more concerning, the company also had to lower its full-year revenue guidance. Originally, management had guided for between $160 million and $180 million in sales, but now they've cut that outlook down to somewhere between $125 million and $140 million. That's a significant downgrade and raises real questions about whether the company is currently benefiting as much from the defense AI boom as investors might think. So where does that leave us? On the one hand, Bigbear.AI is clearly benefiting from broader market conditions. Falling interest rates and the expectation of more cuts ahead are making risky growth stocks look attractive again, and Bigbear.AI is riding that wave. On the other hand, the company's underlying fundamentals, meaning its actual revenue, profits, and execution, aren't lining up with the hype. This creates an interesting dynamic. If Bigbear.AI can successfully secure large defense contracts or demonstrate that its AI technology truly offers something unique and valuable, then today's optimism could prove to be justified. But if financial results continue to disappoint and guidance keeps getting lowered, investors could quickly lose patience. Right now, Bigbear.AI's story is a mix of market momentum and speculative hope rather than solid financial performance. That doesn't mean the company has no future. In fact, the defense AI space could be a massive growth driver over the next decade. But for investors, it's important to separate the excitement around artificial intelligence as a concept from the hard numbers that show whether a business is actually thriving. So in summary, Bigbear.AI has had a huge week and an impressive year in terms of stock price performance, driven largely by Federal Reserve policy and investor enthusiasm for AI in defense. However, its financial results raise legitimate concerns, and the company still has a lot to prove before it can justify its current valuation in the long term. This is not financial advice.